Welcome to our Tax and Accounting channel. Today we are going to talk about the 10-year statute of limitations on IRS collections. I am Gary.Massey, a CPA and the owner of a tax and accounting firm focused on the needs of small businesses and small business owners. I help taxpayers to save taxes and to stay out of IRS trouble. The IRS has 10 years to collect the tax debt. The 10 years begins on the date of assessment, not the date that the tax return is filed. The date of assessment is usually a few days later. After 10 years after assessment, the tax becomes unenforceable. For example, if a 2018 tax return was filed on October the 1st, 2019, and the tax was assessed by the IRS on October the 5th, 2019, the IRS has 10 years until October the 4th, 2029 to collect the tax. After that date, there is nothing that they can do to get that tax back. After that date, the tax cannot be collected. There are a number of actions that the taxpayer can take that will toll or freeze the collection statute. Tolling refers to activities that prevent the IRS from taking action against a taxpayer. Here are some of the most common examples. The first is bankruptcy. If a taxpayer is in bankruptcy, the time of the bankruptcy plus an additional 6 months will be frozen on the statute. In other words, the statute will be extended by that amount of time. Another example is filing for an offer in compromise. Filing for an offer will freeze the statute of limitations, giving the IRS more time to collect on the tax debt. And by the way, this is why I only work on offers that have a good chance of success. Filing an offer that's not going to be accepted is a waste of everybody's resources and only extends the statute of limitations. Another example is filing for a collection due process hearing. This is part of the appeals process. And then finally, requesting an installment agreement will also freeze the statute of limitations, giving the IRS more time to collect. The IRS transcripts show the date on which a tax return is filed, as well as the assessment date. So the transcripts are critical in determining the collection statute expiration date, what we call the CSED. If the IRS files a substitute for return, an SFR, which is done when a tax return is missing and the taxpayer is not being cooperative, the substitute for return will also start the statute of limitations. So the 10-year statute begins when the tax is assessed relating to a substitute for return. The statute of limitations has significant influence on the type of tax planning that we do for our clients. For example, if the tax is recent and most of the 10-year statute of limitation still remains, then an offer in compromise usually makes sense so that the tax won't be hanging over the taxpayer's head for many years to come. On the other hand, if the tax is old and not much time remains on the limitations period, then we try to get our clients into currently not collectible status. This stops the IRS from pursuing collection activities while the statute of limitations continues to run. And with careful planning, the statute can even expire and then the tax simply goes away. I hope you have found this video about the statute of limitations for IRS collections to be useful. If so, please give it a thumbs up. We appreciate that. Subscribe to our YouTube channel and leave your comments below. If you need more personalized attention, feel free to reach out to me by clicking on the link to our website and leaving a message there, or by sending me an email. And you are also more than welcome to call my office and ask to speak with me personally. I will do whatever I can to be helpful to you in your situation. For now, I wish you all the best and see you next time.